All right. Good evening, everyone. Welcome to tonight's webinar. My name is Tyler Ballhorn. I'm the founder of Stockscores. Been trading for 30 years, and tonight I'm going to take you on a little journey on how to become a stock market day trader. Now, this focuses on my approach. It's not the only approach. There's 1,000 ways to the top of the mountain, as Gandhi once said. But tonight I'm going to show you a little bit about how I trade the market and how I've been trading the market for a very long time. As I said, I started trading, about 30 years ago, 1999? No, 1989. Is that 40? That's a long, 30 years ago. Anyway, it's been a long time. So tonight we're going to talk about this. This is my strategy at work on a stock that met my requirements a couple weeks ago. I just pulled an example of recent trades. And the lines that you see on this chart, the little pink dots, the blue lines, the green lines, they all mean something. And tonight I'm going to try to give you a little lesson on that. But ultimately, what's important is that this stock gave a buy signal at $2.38. And at the end of the day, it was at $2.78. It's a 40-cent gain on a $2.38 stock. So, 17, 18% return in one day. And that's the kind of trades I love to make. And tonight I'm going to show you the process that I use to do those. So the itinerary for this evening, step one is we'll just explain what is day trading, just so we're all on the same page with that. I'll tell you a little bit about my story, how I've evolved over the last 30 years of trading, my approach, I'll explain it. Talk about how I measure performance, because we need to do that to get to the end result. My trading day, what I typically do, what you need in order to be a day trader. If you want to follow my approach, I'll show you the steps to do that and the things that you can do to succeed. And I teach people my approach, and so I'll talk a little bit about how you can learn from me. And then the last section is what people ask me most. What is the income potential of trading the market, whether you're part-time or full-time? And so the last thing we'll do is walk through the math, the economics of trading as a career, whether it's part-time or full-time. Okay, so let's get right into it. What is day trading? So essentially, when I talk about day trading, what I mean is we're entering and exiting positions within a trading day. That means when we go to bed at night, we are in cash. And if you hold stocks overnight, that's a different style of trading. It's called swing trading, where you hold stocks for a couple days, up to 2 weeks perhaps. And then position trading is holding stocks for more than 2 weeks, typically a few months. But we're going to focus tonight on day trading. If you want to learn more about my investing approach, I did a webinar on that topic on Tuesday, and that webinar is up on my YouTube channel. You just go to YouTube and search for Stockscores. You can find the Stockscores YouTube channel and watch that webinar from Tuesday. Tonight we're going to talk about day trading. So ultimately we're trying to focus on stocks that are moving abnormally and are very actively traded. We can buy stocks, we can short sell stocks. If we're buying, we're expecting the market to go up and we make money if the stock goes up. And if we sell short, we are expecting that the stock will go down and we are making money if the stock goes down. So here's my desk. I've got a bunch of screens in front of me. You don't need all these screens to start. It's, I would say, something nice to have, but I always tell people that having lots of computers and equipment in front of you isn't really necessary. Doesn't make you a more disciplined trader. It just makes your workload easier. And you should start simple and maybe work up to the point where you've got, fancy computer equipment. But, when you're starting trading, you don't need to rush out. I trade from my laptop if I'm out of the city where I live or, traveling, what have you. I can trade from my laptop fine. This is the kind of stock that I love to trade. This is a stock that triggered my alerts on just a few days ago, October 18th. And the entry signal was right here at $6 a share. And it ultimately went up to $8.52, which meant for every $100 risked, this trade had the potential to make $1,100 of profit. It closed the day at 5 times risk. So for every $100 risked, it made $500. No one would sell up here. That's not realistic, but perhaps here or here. We have different rules that we use. probably wouldn't hold this one until the end of the day because one of our rules is to exit when this moving average is broken. And if you really are aggressive, you might have sold on this candle right here because that's something I call a bursting bubble candle. When a market goes parabolic and it hits a new high and then closes below its open, we have this bursting bubble. And that would have been really your best exit signal on this stock, getting out at about 8.5, which meant that for every $100 of risk, this stock made $850 of profit. We'll go through the economics of trading later. Just wanted to give you a little teaser there on how we do this. You'll see that there's a bunch of numbers up here. So those numbers up there relate to the rules of my strategy. I'm going to teach you tonight that I'm an algorithmic trader, which means I only trade based on logic-based rules. And those numbers relate to the indicators that I use. They're my own indicators. I'll talk about those a little bit tonight as well. All right, so my story. So how did I start trading? I started trading when I was in university, 19 years old. And I was at the University of Calgary studying finance. And I had some friends that traded the stock market. Looked like fun, so I started trading as well. Now, if you can imagine 30 years ago, there really wasn't the internet. I mean, it did exist, but it certainly didn't exist like today. So it wasn't easy to get charts. It wasn't easy to make trades. I used to phone a broker to make a trade, and I'd wait on the phone while he executed the trade and then tell me, okay, you now own that stock. I started out trading penny stocks mostly because I didn't have a lot of money. I was a student. And so I traded, cheap stocks on the Canadian stock exchanges mostly. I eventually started trading futures. I traded the S&P 500 futures before the E-mini contract existed. And again, I would call a broker and he would phone Chicago and get my trade filled and give me my fill back. I did that for a little while. I'm self-taught. I've never had anyone teach me. I don't know that was a great idea, but it was really the only way back then because there wasn't teachers around to teach me how to trade. There was a few books on how to trade the futures market. There wasn't a lot on how to trade stocks. And so I had to kind of figure it out myself. I used to go through the charts. I would download charts from a chart service. It would take forever. Like to get one chart would take a minute just to download the data, and then I'd have to import it into some software, make a chart. Very cumbersome. But anyway, I used to download charts of all the stocks that I knew had done well, and I basically reverse engineered the stock market. I said, okay, here's all the stocks that did well in the last 6 months, up significantly. What were the common signals in those stocks that maybe predicted that they were going to go higher? And the more I looked at it, the more I saw that there was some commonality to how these stocks started trading. And I coupled that with some things that I was learning in some classes at university where we studied whether there was inside information being traded on in stocks that had big mergers and acquisitions. And we found that there was oftentimes stocks would move abnormally before the news came out. In other words, the stock would be trading at $10 a share and it would jump to 11. And then 2 weeks later, the company would announce that they were being bought by another company for $18 a share, and you'd have this big jump on the buyout. And so it was clear that there was insider trading in the market, and we proved that statistically. I took that math, that algorithm that I used in that class, and this is, again, a long time ago, my 4th year of university, so 1992, 93. I took that math and I built some indicators around it, and that's really been the basis of my trading ever since. It's the basis of a lot of the tools on Stockscores.com, and it's how I built a career around stock trading. I was living with 3 guys in a duplex, university student, typical university lifestyle, except I was a little bit of a nerdy student. My buddies would go out to the bar on Friday and Saturday, and I would stay at home and study stock charts. So I don't know, that says a lot about my social prowess, but paid off eventually, I guess. Yeah, it's a little bit of my backstory. So I didn't start with money. I started with $3,000 that I borrowed off of my credit card, and I built that up. At one point, I had a good run. I turned $30,000 into $500,000 in about 3 months. And then, that was the basis of my business. And I started Stockscores. I started some other websites. and started teaching people in 2001. I think I taught my first class. And I teach people how to trade the stock market maybe once or twice a year typically. And I'm doing that again this November. So it wasn't easy. It took a lot of work. I have, they say you need 10,000 hours. I probably have 20 to 30,000 hours of sitting in front of stock charts, learning and teaching myself and developing my strategies. There's a huge amount of time into that. And success, honestly, took me 8 years. It took me 8 years before I was really doing well. For the first 8 years, I did okay. I was a university student. I drove a Porsche 911 to school. It was kind of cool, but I wasn't by any means making a lot of money in the market. I sort of paid my way through school and got to drive a nice car. And, but eventually I started to figure it out. And I'll tell you that, being successful in trading wasn't about having the best strategy. I mean, my strategy is important, but it was about finding discipline and emotional control and focus, and not just focusing on the entry decision, focusing on the process, focusing on the exit decision, focusing on risk management. So important, and things often get focused on just what to buy. And if you focus on just what to buy, you probably won't be successful in the market. You have to have focus on all the different things. And so when I teach people, I teach a very comprehensive approach to all of those things: what to buy it, when to sell or short, or the process to find things, the tools. I built my own tools because I didn't want to use other people's tools. Risk management, emotional control, discipline, focus, all that kind of stuff. So why do I like to trade? I think it's just the best occupation. I can work from home. Right now I'm sitting in my home, and I haven't worked for anyone since I was pumping gas back in, the 80s. And that's nice. I can travel. I can, you can work from anywhere. I took a year off a few years ago and lived in Maui for a while, then lived in Whistler for a while. It's nice. As long as I can plug into a wall, I can trade the market. So the flexibility is great. Freedom is great. Of course, there's a financial reward, but I'll tell you that that's actually not the most important part. Once you get the basic financial needs satisfied, it's really the freedom that's wonderful. I have some friends who make lots of money, have very demanding jobs, travel a lot, work long days, and I mean that's not that great of a lifestyle in my mind. I'd rather sit at home and make good money and have the freedom to go on a trip when I want. So that's a little bit about why I trade. All right, so my approach. It's strategy-based trading. That means I use algorithms to identify trades. I don't trade on gut feel. I don't trade on tips. I trade simply on rules. And those rules are tested over thousands and thousands of trades. I'll show you a little bit of that later. I really want to minimize human judgment because humans are predisposed to fail in the stock market. They get emotional, and we have to avoid the emotion. And I'm no different than any other human. I get emotional too. And I really find it's essential to just have a very mechanical approach to trading the stock market. So that's how I do it. Now the algorithms and the processes that I'm going to show you tonight, I won't go into too much detail, but because the rules and things are something I reserve for my students, but I'll give you a little bit of a sense of how I do it. Those algorithms took 3 years to develop, and they're always being refined. I actually have made some changes even recently to those things. And so that is quite important. So how do I measure performance? So we're going to talk tonight about charts and about my day trading strategy. And there's a few things I need for everyone to understand. And the first is the reward for risk ratio. And that's how I measure performance. So if I buy a stock at $10 and my support price, we call this minus R1 is $9, and I sell that stock at $15, I've made $5 of R, $5 of reward for $1 of risk. Now we don't always sell at 9, sometimes we'll sell at 8, which means our potential loss is -2. Sometimes we'll sell at 7, which means our potential loss is -3. But that's how I measure performance. So if I say I made 6 RR on this trade, it means I've earned 6 times my risk amount. So if I risk $100 on a trade and I make a 6, that means it's $600 of reward. Now, when I say risk $100, that's not the size of the position I take, that's how much was risked. And that's based on the entry signals, and this will make a little more sense when I show a chart. But just understand, when I talk about the RR, or the reward for risk ratio, that's what I'm talking about. So if I say it's a 10, that means it earned 10 times risk. If I say it's a 2, 2 times risk. If I say it's a -3, that means it lost 3 times the risk amount. So how you make money trading is by having small losses and big profits. There is a tendency to think that trading is about success rate. Like you want to be right 90% of the time, 80% of the time. I'm going to tell you that's false. The best traders are usually wrong more than they are right. However, they have big profits when they're right and small losses when they are wrong. And that's quite critical. So don't focus on the success rate, focus on the risk-reward ratio coupled with the success rate. So if we look at this example, and again, this is a stock that triggered a nice entry signal back here. And in this case, you see all these lines drawn on this screen. This is your reward for risk ratio. So it topped out at 11. I would say the first very aggressive exit signal was here at about 8.5. A second exit signal here at about 7.5. Probably the most reliable exit signal that I would typically take was there at about 6 times risk, and it closed that day at 5. So everyone, I give all these different rules for what to do, and people make choices whether they want to be really aggressive. To me, if you have a stock that goes up 11 RR that quickly, like this happened within an hour, it went up that fast. So to me, I'm going to be quite aggressive, and so I might sell there at the 8.5, which means for $100 of risk, I made $850. The amount of capital that would be required to do that, I don't know if you can see here, but it says here 450. It's really hard to see. That's not that hard to see. 450. So that means for $100 of risk, the share position was 450 shares. So we think 450 shares times $6 a share is about $2,800 roughly. Now, because this stock is over $3, you can actually leverage it 3 to 1. So you would actually only need to put up, let's call it $1,000 for simplicity. So $1,000 of capital to make $850 of risk, or $850 of reward. That's a really awesome trade. I mean, 85% return on your capital. They're not all like this. Don't want anyone to think that they're all this good, but there's trades like this just about every day. And my algorithms and my strategy will find almost every one of them. It's a very powerful strategy. All right, so my trading day. Typically, this is how I do it. I'm on the Pacific time zone. And so for me, the stock market opens at 6:30 a.m. So I sit down in front of my desk at about 6:15. I actually lie in bed and go through Twitter and a few different things from about 5:45 until 6:15. I don't eat breakfast. And so I will do a little bit of research in bed, just kind of come alive. Then I sit down in front of I come downstairs, sit in front of my screens. That's about 6:15, 6:20. I start up I have a service that I offer where people can watch my trading screen. That's called Active Live. So I start that all up and I just do some pre-market analysis. I've already done a little bit of work off of my phone in bed, looking at different news feeds, Twitter mostly, and looking at some pre-market data. And then I pull up my S&P chart and the pre-market data on the S&P, and I get a sense of whether I want to be focused on buying stocks or short selling stocks at the open. At 6:25, 5 minutes before the open, I come on to our Active Live service and I give my prognostications, my outlook for the start of the day, give everyone a little plan. I want to build a plan for the day. So for example, today my plan was be careful buying stocks in the open because the market was gapping up into resistance. I expected the market to move lower. And I felt like some of the best buying opportunities would come on a break of a pullback because I do like the general move of the market. It's in an upward trend. And so I felt like it was going to move up from from a low point if it pulled back. And that's exactly what happened. The market opened at it opened at 301, just under 301. It hit a high of 301.07 on the S&P. It pulled back to 299.46 and then broke the downward trend line. And then it ended up moving higher from that through the day. So today's plan worked great. It doesn't always work that way, but I'd say I'm right more than I'm wrong. And sometimes we just adjust our plan as the day goes on. I might come on and make some comments about that. I'm a strategy-based trader. I have 3 primary trades that I do during the day. The day trader is the biggest one, and that's the one we're going to focus on today. I also have a swing trading strategy for people that maybe don't want to put as much time into the market. This strategy plays out over a few days. And then I have a little bit longer swing trading strategy called action breaks. And that plays out, again, maybe over 2 weeks. But my goal is to minimize human judgment. I don't want to let my emotions get involved. So what do you need to be able to do this? Well, knowledge, basically. It's like anything else. You need some knowledge. So there's some core skills. You need to understand the basics of stock trading. How do you buy a stock? How do you sell a stock? What is a bid? What is an ask? What is an option? So those are some of the basics. You then need to have an analysis method. So what are your indicators that you're going to use? What kind of charts are you going to look at? Are you going to look at charts? Maybe you're going to do things on fundamentals. Risk management skills, money management skills. You need to develop a strategy that you test. And then you need the actual mechanics of how to do it. Step-by-step process. And a big part of what I focus on is to be faster than the crowd. I want to find the hot stocks before everyone else does. And so the mechanics are very important. And in order to beat the crowd, I had to develop my own tools. Because if I use the tools that everyone else is using, I'm on a level playing field with them. I want to beat them. I want an edge. And so I built my own tools. And so I don't actually use common indicators, common technical analysis tools. I use my own. And I use my own processes, my own strategies, that sort of thing, because I'm trying to beat everybody else, most everybody else. So when we talk about strategies, again, I've spent the last 30 years developing trading strategies, and it's all about the rules for when to enter, when to exit, how to size positions and manage risk. I want them to be very well tested, well understood. And ultimately, my strategies are based on statistics. I don't rely on, as I said earlier, gut feel. I look at math, and I look at what happens over thousands and thousands of trades and look for patterns. I use a lot of computing power to do that. I have some people that help me program sophisticated analysis software so that I can find opportunities in the statistics. So in some ways, it's like artificial intelligence that I've developed. I hate to call it that because it's really based on my experience with the market and then transferring that into math and letting the computer do most of the work. But I had to tell the computer what to do based on my experience. So here is a screenshot of one of those tools that I use. This is an Excel spreadsheet, and it's the basis of a lot of my testing. I'm going to show you this actual spreadsheet in a little bit. I just wanted to give you a little teaser as to where we're going. So what do you need? You need tools. I have tools like TradeStation, which allow me to develop my own indicators and monitor the entire stock market, I should say the entire US stock market. TradeStation doesn't cover the Canadian stock market, but it does cover the US. And so I have these machines running. I've got 2 computers, big, really high-powered computers on my desk that do all the analysis, and I share that analysis with my students through a service called Active Trader Live. So my students don't have to go out and get the high-powered computers. You can do it from a laptop, really. It'll do most of the analysis work, and then there's a little bit of work that we have to do based on the short list of stocks that my algorithms identifies. We need good tools for order entry. You need to be able to enter your orders quickly. In terms of post-trade analytics, I use Excel a lot. I use Microsoft Word a little bit. I can build a trading journal in Word. I don't do that much anymore, but I used to. But I definitely, every single day, I take time to download all of the relevant trade data, put it into an Excel spreadsheet, and I'll show you that in a moment, and I track the performance religiously. And it's all computer generated. There's no human bias. None of what I show you today is based on my gut. This is all based on math. Simple stuff. You don't have to be a rocket scientist to understand it, but it's based on math and computerized analysis. We also have a tool called Active Trader Live where you can watch my analysis screen. I'll show that in a moment. You also need a good process. So step-by-step plan for implementing the trading strategy. When to buy, when to sell. Very mechanical, very efficient. I want to remove emotion. Human beings screw it up. You know, if you're a normal human being, you're going to screw it up. We have to take our emotions out of it as much as we can. Sounds simple. Everyone says, oh, I can do that. No problem. It's not simple. I've been trading for 30 years. My emotions still get involved once in a while. Certainly not as much as they used to, but it's not easy. And I make mistakes because of emotion all the time, even though I've really made it very mechanical and to try and minimize that human impact. So the way my day goes is I start with determining what I call the market factor. And that market factor is to focus on whether I want to be long or short. And so each day I come up with the market factor, and it switches through the day. At certain times in the day, I might go from being short to long. And so today, for example, we were kind of short through the early afternoon and then had a good long signal late in the day for a really nice rally into the close. And so we'll adjust based on that. Once I know my approach, whether I'm focused on long or short or do nothing, sometimes I do nothing, sit on my hands. We then look for opportunities using an indicator that I developed called a Stockscores action candle. And Stockscores action candles will highlight the stocks that are behaving abnormally. My whole approach is based on the idea that I want to buy stocks that are being accumulated by large investors. If a large investor wants to buy a big position in a company, they're going to push that stock up because they have high demand and it exceeds the supply of that stock and it pushes the price up. When they start to accumulate that large position, they leave footprints, and those footprints come up in trading activity. It trades more volume and price goes up abnormally. And so we can use statistics to identify that, and we can use a computer to look through the entire market and look for stocks that are very abnormal in some way. And so my indicator to do that is called an action candle. I'll show that in a moment again. I've shown it to you already, but I'll show it again. And once it has an action candle, then I assess the stock and its chart to make sure it has some other rules satisfied. I enter the trade. Once I'm in the trade, I monitor that trade for an exit signal. And I also monitor the market for the change of market factor. Because sometimes I could own 10 stocks and the market factor is a negative, and I'll exit those 10 and go into something better. So that is another thing, reality of trading. You know, we have to adjust with what the market tells us to do. Now, all of this process is automated, except for a little bit of the inspection of the charts that you have to do manually, but 90% of it is all automated through that Active Trader Live service. And I'll show you how that screen looks in just a moment. Of course, you need capital. If we think about how much capital, people always ask me, how much money do I need to start trading? Let's say you have $10 million. How much should you start with? My answer is $0. I want everyone to practice on paper applying my approach, or even your own approach, doesn't matter. Practice first. And you know, everyone wants to get in there and make money right away. I think that's great, but you will make mistakes early when you're learning. It's like anything else. If you're riding a bike, you fall down a little bit. When you're learning how to ski, you crash. And it's no different than trading. So why not have those mistakes cost you $0? And we can do that through either paper trading. I have a simulator at tradescores.com. It's for free to use. You can go in there and practice trading with our simulator. Because our number one goal is capital preservation. So whether you have $10 million or $1,000, that's your number one goal. And everyone should start with $0. Once you've made some successful trades on paper, then you're ready to start risking real capital. And so your risk tolerance might be $100. So you see there, I say risk tolerance times 200. So whatever you want to risk on a trade, let's say you're willing to lose or risk $100 on a trade, then that probably needs $10,000 to $20,000 of capital to do that. If you want to risk $50 a trade, then you need somewhere between $5,000 and $10,000 of capital to get started. All right, so that's where we sort of get going with. The next thing we need to think about is the process of increasing your risk. So let's say you're at this level. You're risking $100. You make $1,000 of profit. All right, maybe now you can increase your risk to $200 a trade, and then make $2,000 of profit. Now you can risk $300 a trade. It's a gradual process. And so that person that has $1 million or $10 million to trade with, that's when you're ready to step it up. If you start to fail, if you start to make mistakes, then you want to decrease your risk. And if let's say you make $1,000 and the next level you lose $2,000, you need to go back to risking zero and practice a little bit, get your confidence back. And so that's the process. I really hate to see people jump in with both feet and not know what they're doing, not practice, and then end up losing money in the market because of it. If you follow my approach, you shouldn't risk much of your capital. It should be responsible risk, and that's really something I want to emphasize. All right, so what will help you succeed? I will say this: trading is simple, but it's not easy. You should walk before you run. Trading well requires practice. It requires focus, determination, and discipline. You don't want to be a gambler. You want to follow a strategy. And so I can take you through that process. I can be your support person as you learn. I do that for my students. You can send me an email and tell me I did these 3 trades and all 3 lost money, and I'll analyze them for you and tell you if you're making mistakes, or maybe you didn't make any mistakes. Maybe it's just a little bit of bad luck. That happens sometimes. But usually there is mistakes being made. And so if I can see your trades that you're making, I can usually identify those mistakes and help you overcome them. So let's say you decide, okay, I want to be a day trader. Maybe I'm only going to do it 2 days a week because that's the way my schedule works. Maybe I want to do it every day for the rest of my life. That's up to you. There's 2 ways to get at it. You can develop and test your own strategies. I told you earlier, it took me about 8 years before I was successful. I paid a lot of money to the College of Trading. You know, every loss was a little bit of tuition to the stock market. But after 8 years, I started to get pretty good at it. So that's one way to do it. That's the way I did it. I think the quicker way, the cheaper way, the more responsible way is to benefit from my experience and let me teach you my approach. And that is something that I offer a couple times a year. What I've done is taken all of my knowledge, my strategies, that sort of thing, and put them online in my Stockscores website underneath the Stockscores Education Center. So if we jump over to Stockscores here and go into Trader Training and go to the Education Center, you can see that there is this area where there's all these online lessons. We have videos, written lessons, assignments, tests, the actual strategies. They're all there. You have to be a member to see this stuff. So if you go there now, you won't be able to get in there. It requires a username and password. But that's all online. And then I complement that material twice a year with some live trading. Now there's 2 courses that I offer. The investor course, which is what we discussed on Tuesday, is focused on my investor strategies, so longer term stuff. And then you'll have access to my market scan tool. You get email support from me. You get to renew your access to that tool for $300 a year. You get 6 months access for free. And that's the market scan tool. I'm not going to show that tool tonight. I did that on Tuesday. If you missed that webinar, you can go back and go to the Stockscores YouTube channel and you can watch it there. The Active Trader course is really the focus of tonight. You get access to all of the investor material, so the investor strategies, but you also get access to my Active Trader strategies. Again, email support from me, access to my tools, but you also get my real-time indicators for TradeStation. Not everyone's going to use TradeStation, but if you want to, I don't own TradeStation. It has nothing to do with me. It's just a software program that I use, but I've written my own indicators for it. And so I've spent thousands of dollars on programming, and I give those indicators to my students for free, my Active Trader students. And then if you take the Active Trader course, you're also eligible for Active Live. And so you can do that as well. So what is Active Live? I've automated much of my process. So you can watch my computer create and monitor the market for day trades. It's all automated in real time. And you're essentially watching a webinar, much like tonight. You're watching a webinar of my trading screen. And the alerts come down. It'll, like for example, I'm looking at my screen right now. It says IMMU at 2:32 this afternoon, gave an entry signal. At 3:06, YNDX gave an entry signal. And so we're just watching this. It's kind of like a scrolling, not really scrolling, but it's a window. I'll show you in a second actually how it works. And that service is only available to those who've taken my Active Trader course. So I talk a little bit through the day, and you're seeing the screen that I'm using to make my trades. So we're playing with the same tool. You're just watching mine remotely while I'm watching it on my desk. So this is how Active Live looks. So I've actually done a little video here. And so you can see this screen here is for buy candidates. This screen is for sell candidates. Don't know that that's coming through. I'm just looking at my screen here. Hold on. Anyway, the middle screen, I'm not sure if it's showing for you properly. Looks a little bit funny on my side. Anyway, the middle screen, there, now the lines are coming through. So the middle screen there is my buy candidates. The right screen is my short sell candidates, and the left screen are my swing trade candidates. So you can see it's kind of blinking a little bit, and that's just the process is running. Okay, and it's super powerful. Oh, you can hear a voice there. That was the actual computer saying that stock triggered a strategy alert at that time. So it's really cool. All right, we'll move along. Now, the other training option that I have, which I only do once a year, I don't even know if I'll do it next year, but this year I'm doing it. It's called Mentorship. And so if you want me to walk you through the education, really step by step, we do 12 weekly online meetings. They're about an hour long. Each week is a different topic. And I just take you through the material step by step for people that maybe want me to walk them through and be able to ask questions as it happens, or maybe you're a bit of a procrastinator and you need someone to motivate you each week to do the work. This is a great option because I will take you through it personally. You get a total of 3 months of Active Live. You get 1 month for the Active Trader course, and then 2 months if you take the mentorship. Anyone who aspires to make a living trading the stock market should take a look at this. The mentorship is limited to 15 students, and it's first come, first serve. I'll show you how to sign up for it in a moment, but that's what it's all about. All right, so I said earlier that I complement my online trading with some live training, and I'm going to do that again. So we're going to do some online webinars on Tuesday, November 5th and Thursday, November 7th from 6 until 7:30 Pacific time. And I'll just walk you through the theory, those 2 sessions. And then the following week, we're going to practice running the investor strategies. So we're going to do 3 one-hour webinars where we actually do market scans on Stockscores and identify good trades. And you also get 1 month of my Active Live service included for free. Again, if you do the mentorship, you get another 2 months. You get a total of 3 months with mentorship if you take the Active Trader and the mentorship as one. Now I have a little bit of a special offer. All of this extra stuff is included for free up until Thursday, October 31st at 11 p.m. So anyone who registers for the investor course will get the overview class and the investor market scanning sessions for free. Anyone who does the Active Trader course will get the overview class and the investor market scanning and the Active Trader live session for the month for free. And you can pick any month. You don't have to do it right away. It's up to you. Here's the pricing, $2,495 for the investor course. This is Canadian dollars. I know we have people from all over the world in here tonight, so that's Canadian, a little less than what US people would have to pay. And the Active Trader course, $34.95. Mentorship is $54.95. If you've already done the active course and you want to upgrade to the mentorship course, it's $2,000. If you took the investor course, you want to upgrade to the active course, it's $12.50. If you have any questions about these upgrade fees, just email me. I'll put my email address up later. Now, I've decided to offer one more special thing. I'm working on a new product that I'm going to launch in November. This new product is going to be more focused on the investor strategies. And essentially, on a weekly basis, I'm going to do a video where I do the market scans, I identify the longer term trades that I like, and I show them to you all in a video. I'll give you a commentary on the market. I will review past trades and just discuss whether any of those should be sold. It's kind of like meeting with your stock market advisor once a week. I'm going to do this video, and only those who have access to this service will be able to watch that video. It won't be free. But I'm going to give everyone that takes either the active trader or the investor course, or the mentorship for that matter, that service for free for 2 months. And so that I'm not exactly sure how it's all going to pan out, what day I'm going to start. I'll probably start the week after Halloween, but I have to nail all that down. I've been developing this for a while. I don't want you to think it's like a brand new idea, but I just haven't got all the minor details figured out just yet. Essentially, you're going to receive an email every week with a link to an exclusive video with my investor picks, my analysis of the markets, and updates on past picks. And that also will be free for anyone that registers before October 31st. Now, before we get into the economics of trading, I'm just going to launch this poll. If anyone would like a follow-up email with information on the 3 course options, please click in the appropriate box: investor course, active trader course, mentorship. And if you don't want to get that email from me, just say no thanks. I won't bug you. So I'll leave this up for another 20 or 30 seconds, and then we're going to go through kind of the economics. I'm going to show that spreadsheet that I have and some of those other tools. So I'll give this for another 20 seconds, 10 seconds. Looks like most people have answered. We'll just wait a moment. Still people answering, so I'm going to just give it another moment. So what I'm going to do next is just walk through, how much money does it take? What kind of money can you make? And my answers will all be based on my historical data that I have. I've got databases that go back with thousands and thousands of trades. And so I can pull that data and give you some of those experiences based on past performance. Now, it doesn't guarantee what will happen tomorrow. I should say that at the outset. I feel like it'll continue to work, but there's no guarantee. I mean, I've been doing this for 30 years and it works fine, but I don't know if it'll work tomorrow. We should just go into it with that assumption that past performance does not guarantee future success, as they say. All right, I'm going to close this down and we'll get back to the presentation. And so if you want to register for the course, you just go to stockscores.com and go to the trader training menu and go to learn how to trade. And you can watch some videos on the different course options and then sign up right there. There's more information about the courses there as well. The deadline, this should say, it says November 8th, that's a typo. It should be October 31st to get that free stuff, October 31st, not November 8th. There's my email address, tylerb@stockscores.com. If you have any questions, you can email me there. And follow me on Twitter, I'm @Stockscores. Go to YouTube and search for Stockscores and subscribe to the YouTube channel. I put up lots of free stuff on there, so it's a good place to learn a little bit more about the market. All right, so let's just talk a little bit about the economics of day trading. So we need to understand a few different things. Reward for risk, which we talked about already. Probability, how often are you right versus how much are you wrong. We strive for 70% right, but you can make money with far less accuracy, to be honest. And that allows us to do expected value. That's a concept I teach in the course, and then we can come up with a profit curve. So let's start with this example. So this trade entry was 602. We did this already. I'll just review it again. And for $100 of risk, the position size was 450 shares. I actually reviewed this trade in one of my videos that I did on my YouTube channel, I think a week ago, on the 18th, so last week. And so 450 shares would take, just under $3,000, about $2,800. I'm rounding off, I'm not exactly sure, something like that. And in trading, you can margin. When you day trade, the broker will loan you 2/3 of the capital. So take this number and divide by 3, and you get $950. I know I'm rounding off, but let's just use that. If we exited here at 7 RR, that means we had a $700 profit for a $950 of capital, and so you can get the percentage return. But I don't want to worry about percentage return, because what we're going to focus on instead is risk reward. So this is a screen capture of this database that I have. I'm actually going to show you the actual one because I've got it open here. So let's just jump into here. So you can see this database, and this is my newest one. I have older ones as well. This one goes back to July 1st. And since July 1st, I have actually amassed data on 90,000 trades. And by no means will we take all of these. I'm not trying to insinuate that. But these are all, there was 90,000 trades where there was an action candle. They're not all valid. We have other rules. And so when you look at this sheet here, you can see that anywhere there's a number, I'm just going to try and highlight this. Anywhere there's a number here, that was a valid trade, although it doesn't factor in something we call market factor. But those were stocks that met all of the rules, but maybe not market factor. And so all of that, you can see that there's lots of data here. This is the long side. And then we have the short side as well. And so I can, I'm just waiting for my screen to change. There we go. So that's the short side. And I accumulate all of this data going back, actually this does go back to October, so it's not back to July. I have another one that goes back just to July. And then that stuff, we can track the performance on a daily basis using different rules and that kind of thing. This is the RR for the day. So on August 8th, the longs generated 105 trades, very busy day. Most days aren't like that. And it earned a total of 137 RR that day. Again, this isn't human bias. This is just computerized. There's no judgment in this. Now from that, so that's our sort of our summary page. And then from that, we can generate a reward for risk curve, or I call this a profit curve. And what you want in a profit curve for any strategy, if you're a strategy developer, is you want a nice linear upward sloping curve. And that's what this is. There's a few times when it really jumps. That's actually typically when the market corrects. My strategy is even more profitable in a correction than in a normal market. In a normal market, it kind of meanders higher and it's nice. But when you get a correction, you typically get really good spikes in profitability because the market goes down much faster than it goes up. And so it's actually more profitable. So the income potential, let's just go through the math. So let's say you have $10,000 of capital. That will give you, with margin, $30,000 of buying power. And based on that, you should be able to do 3 to 5 trades a day at $100 of risk. If it's a really capital intensive day, sometimes it is, maybe at $50 of risk. So let's use the lower number just to be pessimistic. So when we trade, we're trying to average around 1 RR per trade. So that means if you're doing 3 to 5, you're hoping to get 3 to 5 RR in a day. So again, let's be pessimistic and let's choose 3. So that means in a day, we're getting 3 RR times $50 of profit, or $50 of risk. That means $150 of profit per day. In a week, that's $750. And in a month, that's $3,000. Using $10,000 of capital, but having $30,000 of buying power. I think that's your goal. If you go into trading, I want you to have that as your goal. I think it's a reasonable goal. I have people that do better. People that are undisciplined could do worse. People that don't follow the rules certainly could do worse. But that to me is the goal, and that's what I want my students to strive for. Now, a little bit of a caveat. That's at $10,000. If you have more money, let's say you have $100,000, just add a zero. Now you can probably make this, I want to say 30 to 50, maybe 20 RR a day. That's your goal, 20, not a day, 20 RR a week. And if you're doing 20, you can have more capital at work. So you might have 20 RR times $200. That's now $4,000 a week. On a percentage basis, that's a really nice return on your capital. What I'm trying to show you is that as you increase your capital, if we go to $1 million of capital, your percentage return will drop because of liquidity. The market can't absorb the large orders as easily. So it's actually easier to get a higher percentage return with less capital. But I would say having more capital will be easier in general because you can take more trades. And so you're spreading your risk out over more trades. When you have less capital, it's a little bit dependent upon your luck. And I don't want to imply that there's luck involved here. We have a very disciplined approach. But my point is, if there's 20 valid trades in a day and you can only take 3, you might pick 3 bad ones. You might pick 3 good ones. If you can do 20 trades in a day and there's 20 valid trades, you're going to earn what the strategy earned. You know what I mean? It's like if you're trying to predict whether the next toss of a coin is heads or tails, it's a 50-50 chance, right? But if you're trying to predict how many heads will occur in the next 100 coin tosses, it's pretty reasonable to say it should be about 50 because we know that the odds are about 50 to, or even odds, right? And so the more capital you have, the more your results are going to move towards the strategy's performance because there's less luck. It's just a matter of trading the strategy. All right, so that's a little bit of the economics of trading. And if anyone has any questions about that, needs some clarity, please email me. I'm happy to go through that. So there again is my contact information, tylerb@stockscores.com. I'm going to do one more webinar on Saturday where I will go a little more into the actual course offerings, a little more detail about what each course covers, that sort of thing. So if you have any interest in it, a great idea to take in that one. It's Saturday at 9 a.m. and you can register on the Stockscores website. And I will see you on Saturday. I'll just show you where to register. You just go back into the website, go from trader training down to upcoming events. And right here, how Stockscores Trader Training can help you make stock market profits on Saturday, October 26th at 9 a.m. Pacific. Okay. That's it. Any questions? I can take some questions. So I've got a few here. Now, unfortunately, sometimes people ask me questions and I don't realize it, and they're asking me at the time I'm looking at a screen. So some of these questions don't totally make a lot of sense. But so one question is Active Live 8 hours a day that we watch your screens? No, because the market's only open 6.5 hours. So 9:30 till 4 Eastern time, 6:30 till 1 my time. Next question. Do we have to enter multiple stocks intraday? Well, that's entirely up to you. I think most of my students do 5 trades a day, I would say, as an average. Some days I do 40, but I've got probably more capital and I'm maybe faster because I've done it a long time. Are they taxes for Canadian candidates? Yeah, if you buy the course, you have to pay the Canadian GST. If you're from outside of Canada, there's no taxes. What if you lose 3R on a trade? Well, then you've lost 3 times your risk. So if you risked $100, then you've lost $300. What was the site you mentioned for practicing without using actual money? That's tradescores.com. So instead of stockscores.com, go to tradescores.com. What is going to be the cost of your new do-it-all-for-you investor service? I haven't picked that yet. I'm not sure. Maybe you can tell me what you think it's worth. I'll probably run it for a little while and give it out for people to try a couple times. And I don't actually know how that's all going to work. So sorry, I know what I want to do. I just don't know the business side of it yet, but I'll figure that out soon. Okay, I'm not seeing any other question. Oh, maybe I missed some. Here we go. I got to scroll my screen down a bit here. Oh no, I got them all. I think I've got all, sorry, it's a little bit hard to see the screen, so I'm pretty sure I got all of the questions, but if I missed one, please email me. I'll throw my email address up on screen again. There it is. And I hope to see lots of you on Saturday at the final webinar of the month. And again, any questions, ask. If you want to get registered, just go onto the website and you can do it there. And if you answered yes to the poll, I will send you an email probably after Saturday. I'll send that email out with some links to different things and some more information on the courses. So I want to thank you all for joining me tonight. I hope you learned something, and I will hopefully talk to you lots of you on Saturday. Have a great rest of the night.